Welcome to Trading Lounge and the daily US stocks for Friday, March the 18th. And just want to start with the S&P 500 here first because obviously the markets look bullish, and secondly that we do have a bullish count for the S&P 500. This has been our original count here with wave 3 here, an A and a B, and 1, 2, 3, 4, 5 here. Looking for the 38.2% retracement for this wave 4 around the 4-1. It's possible to look at this as wave 1 here with an ABC for wave 2, and then 1 and 2 here, and then further up from that point. However, there is a bearish count where we can have this. We were looking at this as a flat or a triangle. So the triangle's ruled out, but the flat still sits there as well. So this would be an A wave, a B wave, and a C wave here, just to keep it simple. And be it wave 1 here or the C wave, they will both be in 5 waves here. So once that tops out here in 5 waves, let's just assume that it will come quite close to the old high here. Once that top comes into play there, then we'll have an ABC pullback, and then we'll go up further. So as I mentioned yesterday, our game plan would be to buy the B wave in that pullback or the top. But we do need, after 5 waves here, we will see some sort of correction, close to that high there. That would make sense, and we can count pretty much 5 waves up there. We can also see today's bar as well. This one was strong, and then this one was quite strong. But this one here, even though it's the market's closed higher, the range is quite small. So it could be tiring out at that point. So anyway, we're looking for a top there. And if we get after 5 waves, we'll get a pullback, and then we'll look to go in. We'll talk about more about that in the US video, but the idea of talking about this now is because this is how we see stocks as well. So the stocks can be bullish, but we would like to confirm that because what we're also looking at here is that flat correction here where it can come to here and then move down into one more leg to the downside. So that's what we have to move through. So that's why when I'll be looking at the stocks today, we can have a look at the bullish count on some of them, and some of them we're long on them, but there's this bearish count that lingers on, even though that the market looks quite bullish at this point. So it's just something that we should just need to work through, that's all. I mean, for the trend traders, if that is a low in here, then we'll be above the 5,000 when that occurs. Let's just go into this 1,000 tick chart here where we've got this pattern sitting here. Let me just open this up a little bit. So this is the flat pattern here. So we're looking at an A wave here, an A, B, C for the B wave, and then up for the C wave here. And in the C wave here, we're looking for 5 waves. So we're looking for 1 and 2, and then 1, 2, 3, 4, 5 for the 3rd wave, the 4th wave. And then the 5th wave here is 1 and 2 here, and 3 here, and 4 here. And then probably 1 and 2 and 1 and 2 here for that. But this is definitely the 3rd wave here. So I think that we could get 2 more little highs to come into play here, which would take us pretty close to this previous high here. So if we were going to turn bullish, but then we would need some sort of corrective pattern to come into play, something that's going to give us, all we really need is a high here, because once it pulls back we can go long above that high, or we can improve it on the second high here, or we could draw a line through there, we could improve it. The other point here too though, even though that this particular high is here, and there is 5 waves that are looking okay here, and of course we could look at this in a more bullish light too. We could look at this as wave 1 here and 2 here, and then we could also look at this here as wave 1 here and 2 here again as well, because at the end of the day that particular structure here pulled back 50-60%, thereabouts anyway, so 61.8%. So that's as a wave 2, that's more acceptable, isn't it, rather than a wave 4. But the Feds did speak at that point, so markets can get a bit volatile. So yeah, the other point I want to make, the next important level up here is the 45. So if things do get out of control, then we'll be looking for a classic trading levels pattern sitting across the 45 here to help us move in at that point. So So that's what we'll be looking for across here in that regard, if things, you know, push up there into that space. So that's something that you can look at too. But we'll talk more about that in the US video. But I just wanted to talk about this particular flat pattern that we have to move through to eliminate the bearish count. Okay, because if this is going to come down here, then it doesn't really matter what patterns the stocks are in. They're going to be doing much the same as well, aren't they? You know, so this is Amazon here. So you could also sort of view what's going on here in much the same light. But we've been looking at this as an A wave, a B wave, and a C wave up here. So we're also looking for 5 waves in this move here. So coming into the 3-2 area here for this now. You know, we could quite easily turn this into a bullish pattern, and yeah, I mean we've got it as a bullish pattern. So let me just find it here. Yeah, probably. Yeah. So just coming back to the top area here, anyway, from the B wave here anyway, 1 and 2 and 3 and 4 and 5, but there is overlap on the 1 and 4 here, so that's a bit of an issue. But yeah, I mean in this case we're looking for an A and a B and a C wave up here. So if it was going to turn into 5 waves, then we'd still need wave 4, 5, and then we'll need an ABC pattern to pull back. So you know, we don't want to get into FOMO and you know, buy at the top of the market here. We want it to pull back a little bit at that point. So, but basically that's just the bullish count. But going back into our bearish count that we've been looking at is like this here. So this wave 4 here, looking at this as wave 1 with an A and a B and a C, and looking for this to move up here further. It looks like we've got 1, 2, 3, 4, 5. That looks quite good at that point. So then I was looking at this being 5 waves in here, and then wave 4, and then wave 5 here. So another little high to come into here, but we don't want it going much further. We don't want it going any further than the 3-2, because then we would have to look at it in a bullish light. And you know, I'd like to be bullish. It's strong. It makes sense to be on the long side here, doesn't it? You know, I understand that. But even so, yeah, the question is will Friday be bullish or will it be bearish? I mean, in a bullish market, we normally see Thursday is the bearish day and Friday is the bullish day. But in a bearish market, it will be opposite. So we'd be looking for Thursday being the bullish day and Friday being the bearish day. So let's just see how that Friday goes as well in all of this. So rightio, so Google here, much the same as well. So we've been counting this up here as 1 and 2, and then 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, but a deep 4th wave, but this one was quite deep in its own right as well. And then looking for this top to play out here, so 1 and 2, 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and then the 5th wave coming in here somewhere. So we'll just see how this, we just want to see how Friday plays out first within this. I mean, it certainly looks bullish for all of this too, I understand that. Meta here, we're also looking for, this is just the daily chart, we've been working on the intraday chart, but we're just looking for this move up here to be part of wave 4 to pull back to this wave 4 here, and then give us another leg down for this move to come into play here, and then we can move up in a stronger way at that point of time there. So I mean, we've got a series of 1s and 2s in here, so that they need to play out down here, and that's why we're looking for one more downside. And we can buy at this stage here because the B wave will be strong, and buying at this low here means that you know, the S&P and the Nasdaq have finished their moves to the downside with other stocks as well. So yes, just still looking for that one more move to the downside. I mean, even if this does appear, you know, if this is 5 waves that moves up through here, well then after 5 waves it's going to have an ABC back again, isn't it? It's going to leave the top exposed, so we'll be able to go along at that point there as well, just like I mentioned with the S&P. So Microsoft here, also the move up through here looks as in 3 waves. We don't have a nice clean 5 waves up there, and in fact this move down through here counts quite nicely as 5 waves. So I was looking at down as a sort of wave 1 here, an ABC for 2 here, and then 3, 4, and 5 here. We may only get 3 waves down. We could probably look at this as a wave C or wave Y here, but at this stage it doesn't matter too much. And the other point here too is that the 300 is a really nice resistance. So if I was going to be bullish and expecting the market to take this top out here, I would definitely need to have a classic trading levels pattern on the 300 as support for further upside at that point. So we don't have that yet. As tempting as it is to go long, then we just need to be a little bit mindful of this. So let's just go to one of the intraday charts. I think it might be this one. Yeah, so yesterday we were looking for the A wave, the B wave, and the C wave up here. Once again, this has moved back down quite a lot here in this case, so a little bit unsure how to do that. I don't know if I've got a top in play or we've got one more top to go, but we're not going to turn bullish unless we get that 300 as support, and we would want that first high above the level there as our reference point. So that's what we'd be looking, that's what we'd need to, because the market's got to prove to us that it is strong, and obviously this 300 here is a line in the sand, and we need to be, if you're going to go long, you want the closest, largest number as support, not as resistance, because you're asked, you get away with it, but over time, when you run enough trades, then all these little things become the edge, that you need. So we just need to wait for that to play out. Unfortunately, if we're going to go short with this, then obviously we can go short down here, but that's a long way, and any move down here is going to see a bounce back up. So maybe the 290 here. As a resistance there, so you'd need that as a classic trading levels pattern. So let's just assume for a moment that the market does come down and it have to retest. So you want that first low below the level, the routine. So we're looking for something like this here at that 290, and of course when we've got that low in, the market can come back up above here for that, and then you need to rework it coming down again. But always work it, if you're going to short, work it from the bottom and just keep working up on the lows at that point. That's a pretty safe way to go. And if it does go to the upside here, then it's going to fluff around here for quite some time, and we'll need that that long trade set up at that point. So the arrival, the reaction, the first high above the level, the ABC. So it's quite a journey to get from resistance to support. So we've got time, but going short, going long just here, like I said, you can get away with it, but we might end up with a situation like this. That's what we're thinking. So Tesla, so we've got, this has been our original count with the A wave, the B wave, and 5 waves down for the C wave, wave 4. So there'll definitely be a low in place here, but we're also looking at the possibility of one more low, coming into play here. So, yeah, we need to look at both of them. I can't remember which ones were on here. So the bearish count is this one here. This was with wave 4 here, but the bearish count for this one here is, because we're looking here as 1 and 2 and 3 and 4 and 5 down for 1, and then back for 2 here, and then down for down for 1 again too. So taking this top out here, that kind of destroys that count that we've had on the bearish side. So it puts more weight on the bullish side. But also thinking that, well, what happens if, the thing that we showed, the pattern that we showed with the S&P 500, where, it moves up here in 5 waves, and then it's going to have a move down. So we've still got that could play out here as well, and that means that this wave 4 just goes over to here at that point, as an A wave, a B wave, and a C wave. Now, because that's we can look for 5 waves up in that move here. If it is going to be bullish, then we would get some sort of retracement back some pullback or after this trend from these highs, and that means that we can go long over here for that. So we just need to be we just need to be a little bit tactical as we work through this. That's all. Even though we this is the other count that we've had, the bullish count. So yeah, look, once again with this here, if we look at this, we just let it go. I don't know where the top will be. Let's just say that it comes up here somewhere, and then we get a pullback in here for this or something. It's it's at that point that creates the safe trade at that point, and it may have its pattern across here. We may get a classic trading levels pattern across here, the arrival, the reaction, the first high above the level, the ABC, and so on. Let's go to the 100 ticks, and we're already long here for this. So so this is just the bullish count at this point. I had a little bit of difficulty with this little low here. I don't know if we should put this wave 5 on this low here. It does look impulsive down here, but at the same time here we can go 1 and 2 and 3 and 4 and 5 here to finish that leg off. So I do wonder if this is a wave 1 here with an A wave, a B wave, and a C wave for wave 2, and then that becomes wave 3, 4, and 5 here to make wave 1 here, so that would make wave 1 up here as such. So we could just plonk that in there just as a thing, and then back for wave 2. That kind of makes sense to me, and then this just keeps on building from that point. Now, I've put a stop in here really close, and we probably get stopped out, but at least we protect that, because I know like with the S&P and that, we can see that we've got 5 waves coming up here, and they can go a bit further and so on, but then they'll have that pullback to go up higher or to come down lower at that point. So we kind of want to protect this, get out, and find our way back in again. To have the 900 here as a classic trading levels pattern, that's really, that would really sort the oats out from the chaff, so to speak. That's where we'd be looking to go long from. So keep that in mind, because let's just assume that Friday is bullish and it moves up here. Well, then this is the place to add to this. This is what you'd be looking for to add. So I will put that up there, but we need that pattern there for that. And if Friday closes strong, well, then Monday's going to follow through on that, which is the norm. Square here, we've been looking at this in a couple of different ways. We can look at it with the low being in place here, with wave 1 here, and then an ABC for wave 2, and then once again we'll have to look at these 5 waves up here doing the same thing, and then an ABC back again, and we can call that in for 1 and 2 at this point. So we can put that in here. But I had this as a wave 4, and we're looking for this to possibly continue to move down as a wave 5, in line with the rest of the markets, but the rest of the markets have changed a little bit, so we need to change with it. So in this case, we could also look at this here as the A wave here, and ABC for the B wave, and up for the C wave to make wave 4, and then we could just, come on down, one more leg down with the rest of the market, if that's going to be the case. So it's the same story through all of them, as I mentioned with the S&P as well. So we can have lows in place, and that's fine. It's possible to have all of this as a flat correction, as an ABC pattern for wave 4, and then move down. So the way that we're going to handle that is we do need this move up here to top out. We could look at this here as 1 and 2 and 3 and 4 here, and then 1, 2, 3, 4 and 5 here. So we're going to be quite close, to top out at this old high here. So getting that pullback here, starting with the top, once that market, first of all, we don't know where the top is, but we'll only know where the top is once this market pulls back. And when it does pull back, we'll be exposed with the top there. So you can go long above that top. And secondly, you can go from the second high. That's always safe. That's the B wave high or wave 2. So down for 1, back for 2, and then down again. So you can go long at that point. But I'm just going to put it up there at the top there for the moment. So this is the way I think that is the safest way to handle the situation in terms of trend trading and moving higher in that regard. With the banks as well, we'll just run through them. Goldman's as well. So we're also looking, as yesterday, as you know, we were looking for little 5 waves up here. We've got 1 and 2 and 3, and this is a little ABC for 4 here, or 4 to here, and 1 and 2 and 3 and 4 and 5 to push up a little bit further. So we really need for that to play out there for that. This is Morgan's here, so we were looking here as an A wave, a B wave, and then 1 and 2 and 3 and 4 here and 5. The wave 4 coming back to the wave 4 of 1 lesser degree. It is starting to overlap this a little bit in this point. You know, I could look at it differently. I could put the A wave here and the B wave here and the C wave here and call it a day, and we can move up. But also here, I would want to see, because of this low here, I need to see this as wave 1 and 2 here and 3 here and 4 here and 5 here, and then get the pullback here from this as well as an ABC pattern. And I'm happy to go long and to do that at that point, but I still need to see 5 waves here and not 3 waves here so far with this, you know. So yeah, we'll just continue to chill, but you know, I do see both sides of the markets, but we just need the trade setup, and we need a strong trade setup with all of this. Just on the intraday here with BAC, yesterday, as you know, we were looking up for an A wave, a B wave, and 1 and 2 and 3 and 4 here, then 1 and 2 and 3 and 4, and then 1 and 2 and sort of 1, 2, 3, 4, 5. So we're close up here as well for that. So once that top comes in, then we can go long above that too. So yeah, we just need to move past any of these being corrective rallies, and we can call the lows in on all of these. But yeah, we just need to move through any possibilities here. I mean, this is not the best 4th wave here as well. I understand that. It makes a better. Well, you could look at all of this as the A wave here, the B wave here, and the C wave here, then 1 and 2 here. Probably still need to push wave 3 into here though. So it's not there's a few little problems with all of that. But once again, we want that top to come in wherever it comes in, and then we want to see a pullback, and we will, because this is 43, which is the top of minor group 1 of 40, and getting support on this level here would just take us straight up to 5 at that point. So we're just looking, we want that first, we're going to go long above that first high, so don't forget that, but we want that pullback first. But otherwise, we'll be, you know, heading on lower. So if we see Friday being weak, well then you'll know that Monday's going to follow through on that as well. And then we'll be, you know, we've got a turn in the market. So look, at the end of the day with this particular video and the state of the markets, I think that, you know, we need to be open-minded, we need to be bullish, we also need to be bearish. So that means that if you're going to be in the market, it comes down to having a really good, strong trading setup, and that's what I tried to sort of point out today. So yeah, we just need to look for that, you know what a good trade setup looks like for you. So you know, if you've got confidence in that, well then you need to go for that. Alrighty, cheers.